I want to talk for a few minutes about why you can't bet your retirement on AI. Yes, I said that correctly. You can't bet your retirement on AI. This is going to be an unedited video, just some thoughts where I've been seeing a lot of articles, a lot of good articles, a lot of great information about AI, about AI stocks, and I want to talk about how that relates to your retirement and why you might think twice before investing in AI as a retirement source and what some other options might be. My name is Jeff Wright. I'm with Fish Creek Capital. I'm president and founder of Fish Creek Capital. We focus on creating income for retirement planning, insurance, dividend investing, particularly with actual, the stock market. We focus on dividend growth, and why that is a great way to build income over the long term for retirement. But let's talk about AI stocks and why they might not be best for your retirement. So, some great articles out there. You can just Google and you'll see that often, there's a lot of talk about us being in a bubble right now, especially with, the market is still just basically going up, even last week. Today is June 30th, so we're the last day of the second quarter. The market is closed now, and it's been one of the best quarters in a long time, even after like some down moves last week with the NASDAQ. So a lot of talk about, is this a bubble? What would the bubble look like, or could it look like, and things. And we don't know. You don't know a bubble happens until after the fact, right? But we do know that the S&P is overvalued right now compared to historical evaluations. So that's something to consider and to think about. And often, too, like one of the articles, part of the reason there's a concern about a bubble and just even why you need to consider your AI investments is because because the amount of AI capex that is being spent by Microsoft, Google, Amazon, Meta, SpaceX, and now, and it's going to be, over $1 trillion. And the reason that's a big deal is because the profits haven't shown up yet. So you've got companies like, again, Microsoft, Amazon, Google, who made tons of cash flow, they are great companies, traditionally low debt, good management. They have performed like extremely well the last few years, but they're spending most of their cash flow on these capex investments for AI. And what capex means is that stands for capital expenditures. So they're spending, just like your business as a business owner, they're spending all their profit and they're putting it back into their business, which can be good, but it needs to be able to create a return, right? And that hasn't, we're not that far along to see if that's going to happen or how that's happening. So you've got like Micron; those are the hardware companies. Nvidia sells the chips as well. Micron's doing memory and things. And so the reason that stock has done so well is because the companies like Google and Amazon and Meta are having to buy their products in order to use this, as part of their capex investments, right? Because they're all chasing this AI train and trying to, chase the AI rabbit, if you will. And basically, Micron bragged about that on their earnings report last week, and that we're able to just charge whatever we want because these companies are frantically buying to be able to try to be at the front of AI. So if you go back in time, you can go all the way back to like railroads, and every time there's been a new technology or advancement made, like you got the railroads, you got the car, then we fast forward to the internet. All these companies are racing out there to try to get ahead of this technology, and many of them fell. So most of the people that invested in those technologies, even though they transformed society, like the railroad, like cars, like the internet, and now AI, if you will, transforming society, most of the people that invested early on in those things did not do well at all. And they basically lost money because it's too early, right? It's too early to tell. The prices are way overvalued in most cases. Some of these companies aren't even making money. And then you got the companies that do make money, like, the Google and Amazon and Meta. Now they're spending all their cash flow on those things. And so it's going to have to show up in the numbers. And so that's why you don't want to just chase an AI trend. You don't want to just, guess on which one of these companies is going to be out front. Like it took Cisco. Cisco was back, in the internet.com bubble. And here, let me look behind me here, or in front of me on the screen. Let me find, Cisco took like 25 years basically to get back to their .com price. And you don't want to bet your retirement on that. You don't want to hope that you're going to pick the right one. So it's just too hard, and you're not going to be, the odds are against you. And so you don't want to put your retirement on that. And so I'm just kind of straight talk here. This is not, financial jargon. I'm just being upfront and straightforward about why you don't want to bet your retirement on this, and why you need a financial plan that is going to work, and one that is proven and that has taken the guesswork out of it. So I'd love to talk with you about that. That's what focus on here at Fish Creek Capital, is helping people with their retirement plans and focusing on investment strategies that show results over time, over the long haul. That's why we like dividends. It's not a sure thing, but right, I can't promise that. This is just for educational purposes only. But if you take companies that are, strong management, low debt, great earnings growth, returning some of that earnings growth and that cash flow back to shareholders in the form of dividends, and then if they're able to grow that dividend over time, it's just like your cash flowing business that you have. Like if you're, producing cash flow month after month, year after year, it's going to build up and it's going to grow, right? So public companies are the same way. And so we focus on those, and we want to be able to build you a portfolio of those type of companies that will create income for you over the long term. And I can show you how to do that. I can help you do that. You don't even have to move your money over. There's that's not a requirement. I can still help you, and I'd love to help you. And we can look at a calculator that can kind of show you what that income can look like over time, over the long term. Again, educational purposes only. But more importantly, we can just create goals and the discipline around the path to get there. That's the most important thing that you actually need, really. It's not the investments. And I'm a testament to that. Like you'll see that I've talked about in other videos, I've lost money trying to trade. We've had our own small businesses. I was part of one of the biggest franchises that through a family business, and again, they produce cash flow, right? So you want to be able to invest that cash flow into income strategies that will grow and give you the ability to sell your business, pass down your business, just create flexibility for you in your retirement. And I can help you with that. I've got real world practical experience with that. So I'm speaking from experience. This is not textbook. Click on the link below. I can get on a call with you, a free call. There's no jargon, no slick talk. No, I'm not selling you anything. I just want to be able to help you think through your retirement plan and why you don't necessarily want to chase the bubbles or the newest technology that's out there when it comes to your retirement and creating income over the long term. So please reach out below. Please subscribe and follow. Schedule a free call, and I'll love to meet you, and I'll see you on the call.